US debt crisis, golden solution. Target the gold price to increase inflation. Now, the US officially owes $27 trillion. Jim Rickards writes in the Daily Reckoning that nearly $7 trillion has been added since President Trump took office. This year's budget deficit is estimated at $3.3 trillion, 3 times the forecast last year. The coronavirus is responsible, and the number must be an outlier. However, for the foreseeable future, annual deficits will be at the level of $1 trillion. Basically, the United States will go bankrupt. I'm not saying this is hyperbolic. I don't want to scare people or draw attention to myself. An honest assessment based on numbers. Now, if we had $50 trillion economy, a debt of $27 trillion will be enough. But we don't have a $50 trillion economy. We have an economy of about $21 trillion, at least we did, which means our debt is bigger than our economy. When is the debt to GDP ratio so high? When does a country reach the point where it will turn things around or end like Greece? Economists Ken Rogoff and Carmen Reinhardt conducted a lengthy historical study dating back 800 years, looking at individual countries or empires, in some cases where their debts were bankrupt or defaulted. They determined the dangerous area to have a debt to GDP ratio of 90%. When it reached 90%, they found that a milestone was coming. At this point, $1 of debt yields less than $1 of output. That becomes a real obstacle to growth. What is the current US debt to GDP ratio? About 130% response to the pandemic spiked. Previously was about 105%. So we are deep in the red zone, and we do not retreat. The US ratio to gross domestic product is dangerous. It has a $1 trillion+ deficit and spends more. We are heading towards the state debt crisis. This is not an idea. It is based on numbers. How do we get rid of this? For the elite, there's really only one way out at this point, and that's inflation. And at some point, they are right. Tax cuts do not do that. Structural changes in the economy do not. Both will help if done properly. But the problem is huge. There's only one solution left: inflation. Now the Fed has printed trillions more in the last few years and trillions more in the last few months. But there was hardly any inflation. Most of the new money was given to the banks by the Fed. The banks returned and deposited with the Fed to earn interest. Money never went into the economy where it will produce inflation. As a result, even minting money didn't work to stimulate inflation. Anything left in the size back? Actually, there is. If the Fed uses it, it can cause inflation in about 15 minutes. How? The Fed can hold a board meeting, vote on a new policy, go out and announce to the world that it will take effect immediately. The price of gold is $5,000 per ounce. They can make this new price by using the Treasury's gold at Fort Knox and leading US bank gold sellers to carry out open market transactions with gold. If the price is $4,950 per ounce or less, the buyer becomes the seller if it's $5,050 per ounce or higher. They will print money when they buy it and reduce the money supply when they sell it through banks. Second, in the 1970s, it ended Nixon's conversion to gold by US trading partners. Nixon didn't want inflation, but he did. Gold rose from $35 to $800 an ounce in less than 9 years, an increase of 2,200%. United States dollar inflation was over 50%. between 1977 and 1981. The dollar's value was halved in those 5 years. It may sound strange, but it actually works. Here's how. When the Treasury took control of all the gold in the country during the Depression under the Gold Reserve Act of 1934, it also took control of the Federal Reserve's gold. But there is the Fifth Amendment in this country that says the government cannot simply seize private property without compensation. And despite its name, the Federal Reserve isn't technically a government agency. Therefore, the Treasury issued a gold certificate as compensation to the Federal Reserve under the Fifth Amendment. To this day, this gold certificate is still on the Fed's balance sheet. Now, come to 1953. The Eisenhower administration opposed the debt ceiling, and Congress did not raise the debt ceiling in time. Eisenhower and the Treasury Minister realized they couldn't pay the bills. What happened? They turned to this strange gold trick to get the money. It turned out that the gold certificate issued by the Treasury to the Fed in 1934 did not take into account all the gold the Treasury held. He did not take into account all the gold held by the Treasury. The Treasury calculated the difference, sent a new certificate to the Fed for the difference, saying, "Fed, give me the money." He did. So the government got the money it needed from the Treasury until Congress raised the debt ceiling. This talent exists today. In fact, it exists in a much larger form, and here is why. Currently, the Fed's gold certificate is worth $42.22 in gold per ounce. This is nowhere near the market price of gold, which is around $1,900 per ounce. Now, the Treasury can issue a new gold certificate to the Fed worth 8,000 tons of Treasury gold at $1,900 an ounce. They can take today's market price of $1,900, subtract the official price of $42.22, and multiply the difference by 8,000 tons. I did the math, and this number is pretty close to $500 billion. In other words, the Treasury can certify gold at the Fed at $1,900 an ounce for 8,000 tons at Fort Knox and say to the Fed, give the difference more than $42. The Treasury would have close to $500 billion with no debt. It does not increase debt because the Treasury already owns gold, just taking an asset and launching it. This is not a fantasy. It has been done twice. It was built in 1934 and was rebuilt by the Eisenhower administration in 1953. It can be done again. It does not require legislation. Will the government take into account the gold number I just described? I do not know. However, the main message is that solutions to current debt levels are based on inflation. This means revaluation of the dollar through a higher gold price or the introduction of gold and giving the money to the government. There are lots of moving parts here, but they all point in one direction, which is higher inflation. This is the only way to prevent America from going bankrupt. Unfortunately, it also reduces the value of your dollar. Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.